Thank you. Thank you. Great to see you. An interesting scenario playing out in gold. But there were a lot of analysts that were looking for a much more complex and deep downside move in gold because the significance is literally we've seen gold move from call it about $2,600 back in November of last year, up to these record highs. And yet we found support tentative because that might not hold at around 3,300,
Mm-hmm.
which is roughly where we're sitting right now. Well, we'll take a look at a chart. It is basically a daily chart of gold futures. This right now represents the June contract month. And you can see that I've really put in a couple of studies, a Fibonacci retracement long-term data set from 2617 up to the record high, and then another data set starting from the lows back at the beginning of April at 2967 up to the highs. And we get what we call confluence. Confluence in a Fibonacci retracement data set is where you're using two different variable time bands and you get a price point that comes in at a significant Fibonacci number. So for example, the lows that came in the middle of May at around $3,166 were both a 61.8% retracement from this short-term data set and a 38.2% retracement from this much longer term data set. Now, we did see gold move back up, and right now we are really at a key level, which is right around 3,300. And you can see that there's two different data sets saying that this is significant. The 23.6% and the 38.2% are both alluding to 3,300, providing strong technical support. So when you look at that and the fact that we're above this purple line, which is the simple moving average, it's a 20-day, and then we look at the stochastic oscillator to really give us an indication whether gold is oversold or overbought. It is not oversold at this point with the percent K and percent Ds at around 50. We would look for a potential top once or if they move to about 80. One thing that we can say is that gold has become range bound rather than strong trends either up or down. If you consider that since pretty much December of last year, we've seen gold go straight up with two very, very subtle corrections. The first one, April 7th, the second one more recently, May 14th. And in both occasions, these corrections were not deep by any means. What I believe we're seeing is we are seeing continued central bank buying.
Okay.
We are seeing good consumer demand. And right now, the weakness that we've seen recently has been where the current administration's negotiation in terms of trade agreements with different countries are kind of coming through. So depending on how much headway the negotiations of trade deals picks up or drops off, that's really what we're looking at. And the other thing that is going to be important is going to be at the end of the week, which is the most current PCE. And that, of course, is the preferred inflation measure of the Federal Reserve. And that will help guide them in their next monetary decision. Well, obviously, if the dollar finds support at the current recent lows that came in, very, very recently at around 98.73 on the dollar index, the next level of resistance comes in at 100.75 and then again at 102.492. A move to either the low area above 100 would not be that significant. That could be met with consumer demand. In other words, dollar strength, if there's buying in the market at the same time, kind of cancels each other out. A strong move to about 102 would decrease the value because it's paired against the dollar by about 3%, and that would be much more significant. The key is, you correctly pointed out, the dollar has absolutely been in a free fall from January 2025, when it was sitting at 109 down to 98. That's 11% drop in the dollar itself.
Yeah.
And that was one of the most significant components of the recent move higher in gold. The investment community being strong sellers or strong buyers, if they're strong sellers and the dollar is moving up, it's going to magnify the intensity of the sell-off. In the same time, when we've seen this incredible dollar weakness coupled with buying by retail and institutional traders, that certainly is what took gold from relatively low levels in the middle of April. And the one thing that we can see, I pulled up a different chart. It's still representing June futures. The one thing on the bearish side is that we can see these recent tops in the market. We've had a series of 2 lower tops or lower highs. That does say that we are seeing this range compress. And at the same time, we have to acknowledge strong support at approximately $3,175. That is the 61.8% retracement of the small data set. So we have a compressing range. We have seen a series of lower highs, but we have strong support at about 3,200 and a little bit below. The question now is whether 3,300 will hold. And as I said, the key to that is going to be the news that comes out about the trade negotiations by the administration. If they continue to alleviate the fear of trade wars, global trade wars, of course, that cannot be bullish for gold. If they stall in a certain way or slow down, then we could see the momentum pick up. And the other thing that we're going to want to watch very closely is inflation. Because as the minutes showed that were released today, the Fed is very concerned about a uptick in inflation. And if we get another reading that shows that inflation is continuing to grow, that is going to affect the Federal Reserve's next monetary decision. We have to acknowledge that although the market has come down a bit, it is still in a fully bullish momentum and demeanor. And what I am really looking at is this 50-day moving average, because traders look at prices above the 50-day moving average as being in a short-term bullish trend. Below it is bearish, of course. So we are above that. We did come down and form a bottom at around 3160, but bounced right off of that. And the one interesting thing is that when you think about what happened on Friday, where the market was up, $50, $60, and then yesterday it took it all back. We got that whipsaw, and that whipsaw has just been over the last 2 days because we had the 3-day holiday weekend, and now we've got kind of a wait and see attitude. You can see not very much movement today whatsoever in terms of range itself. The high 33.24, the low 32.86. So not a tremendous range in the market. It is still, technically speaking, solidly bullish. And if that's the case, to answer your question of where are our next levels of resistance, we are currently seeing resistance being the high that came in around 31.50. Above that, we're starting to look at the all-time record highs and some of the closes. The all-time record high, 34.40, 34.41, achieved on May the 6th, is the number you want to see on a closing basis. Of course, above that is this one, what we call a wick, meaning on an intraday basis, we saw gold break 3,500, but it's never closed in that area. So that's not significant until we see gold break back above 34.40.
As Gary explained, this gold level isn't just technical, it's a signal. With the dollar weakening and uncertainty building, now's the time to pay attention. If you found this breakdown helpful, give it a like, subscribe for more expert insights, and hit the bell so you never miss an update.